In past question, so let's look at some past questions.
Asking quindi those who
So let's see. Past question, past question. Trying to get question. Mhm. Why are questions difficult to get? Uh, Jesus. If you have any question, you can put it in the Google shop. December. Yeah. Okay. Think I've seen one. And, let me see. Oh, I'm sending one now to the group. Have you seen this? I've sent one question to the group. Check, check.
Yes, sir.
Let me see again. If there's anyone that is interesting again. Here's another one. Send the second one. Send the second one. Let me see if I can see another one. Okay. Okay, let's work with these two first. Let's start with the second question. Let's start with the second question. So please, we need somebody to help us to read. The second question.
Question 3 or question 4, sir?
I think question 4.
Okay, question 4.
Mm.
John Obi. John Obi has been running his business in the name of Jubi Nigeria Enterprise. He is in the business of manufacturing spare parts for vehicles in Aba. He decided to change his accounting date, which has hitherto been September 30th. Some years later, the business was discontinued for lack of raw materials, which he could not import from Walton, Syria. The adjusted profit of the enterprise as follows. Year ended September 30th, all figures are correct. You are required with the following additional information. Bad debt in the sum of 120,000, which was written off in 2010 assessment year, was recovered in October 2013. A sum of 20,000 was spent to recover the bad debts. An expenditure incurred in assessment year 2009, though taken into account in the statement of comprehensive income, was not paid until August 2013. On cessation, the Revenue Authority, I cannot see the part of it, the Revenue Authority intended to conduct a back duty investigation. The taxpayer has been duly informed. As a tax consultant, you have been, I don't understand what, that something is blocking that, I can't see, you have been ascertain the assessment.
No, no problem. Ascertain the assessable profit for the period covered by the change in accounting date and cessation of what? Business. So you are required. This question very well. Okay. You are required. Let me go there then. You are required. You can write now. You are required. Not we or you. You are required. You are required to compute accessible profit for all the relevant years. For all the, take note, I repeat, for all, not relevant years, or for all. Mm. Mm. Okay, I'll start searching. Which year is this? So some of you that have gone through past questions. I think May 2018. May 2018. May 2018 is the question to be placed. So let's look at the question now. So this is a cessation question, right?
Yes. Change in accounting date and cessation.
And cessation. So the company has been maintaining September. Abi? So I think they now change it to another month. Which month? December. Then got to some point. You now see is when?
2013 December.
Okay, 2013 December. So we are applying two things there now. So we are applying change of accounting date and cessation. So for our cessation, there's no old rule and new rule for change of accounting. So you thinking whether should I use old or new will not come on cessation treatment. But on change of account. But for cessation, we have both old and new rule. Abi? And then you need to think which of the two are you using for this question? Old rule, because it says operation 2013. So as at that time, then what we still have to be applicable is old rule. So we now use old for that. So John will be
We can't hear you, sir. We can't hear you, sir.
Can you hear me?
Yeah,
Can you
It's not audible enough.
We are not saying anything. So I said we are using two rule, change of accounting rule, and cessation rule. That's what the question is testing. For change of accounting, we don't have issue of old or new date. But for cessation, there is a problem of whether we are using new rule or old rule. But when you look at the date of cessation in this question, automatically you agree that we are using old rule because the business is operation 2013. So that is what we agree. So for change of accounting, we first of all do composition of accessible workers. For 20, when the next change, or can use for change of account first. 2007. Can leave it or let's use for change in 2007, abi? Yes. 2007. Then 2 years will now be to 20. Are you sure? They change to 27. Let me know for your trap. Oh yeah, when did they change the account?
28.
You can see now somebody is saying 28.
2008, sorry.
It's 28.
28. Because they are prepared year ended in 27 for September.
Yes.
So they can't prepare another one again. It has to be 28.
So 8 years.
So the next 2 years will now be 29 and what? 2010. So
Relevant years.
what?
Relevant years.
And for the relevant, not for all the years. This is for the relevant year. And for the relevant year, for change of accounting, it's just 3 years. When we get to cessation, will you pick 2 years? But I say for all the relevant years there signifies the rule in change of accounting date and the rule in cessation. But if it is for all the year of assessment, you must first of all decide on this one. You also decide on cessation. Then you now collate everything together to get your all the year of what assessment. But since it's for the relevant year, so we have 3 relevant year under change of accounting dates, and we have 2 under what? Cessation. So let's pick that on cessation. Change of accounting date first. We have basis, period, and we have accessible. This is old date. So our first year is 2008. 2008. The same thing for new of assessment, basis period, assessing. This is for new one. This is for new date. This is for new date. Why this is for old date? So still the same year. 2009. 27. So I know what the rule requires. You change your account. First of all, it used to be December. Sorry, it used to be September. Is that not change of account? And what is the position of tax authority? What is expected of you when you change your accounting date? Can you give us the step? Because somebody is asking that why is it for old and new date? Is that not what the law requires? There are 2 dates involved now. And we said you should do for the 2. Then what do you do next? And why are you asking why is it new date? Total. So under the old date, our old date used to be September. So in that case, what will precede 2008 will be 30th September 2007. It must commence on August 2006. You agree with this? Then the next day will be August, sorry, October. Okay? And 12 months backward. That's next of October 06. The next day here will be 1st of October 07 to 30th September. First of October 8, 30th September. That is for the old date. Then for the new date, our new month is what? December, have we? So we apply December here. So it will be 31st. December 07. 12 months backward will be January. Okay? So these are the periods. So once you fill the period, the next thing is to attach your profit based on the one you can see direct. And anyone you cannot see direct, then it will require we to work. So what's the price profit there? Year ended September 2007. Is there any period that is saying that here? This one, Abby?
Yes, sir.
How much is that year ended there?
It's 40,000.
840.
Are you able to adjust the camera?
840,000. Yeah, this market is more likely to like this. 840,000 naira. Is there any profit that is showing us year ended September 08?
No.
No, Abby?
No, sir.
It's period to be have, and what we need is year ended. We don't have for 2009 to September.
No.
Year ended 29 September.
No, that one is for December.
December. Take notes. Okay? Meaning we don't have these two direct. So let's go to the new date. Is there any profit showing year ended December 07?
No.
December
No.
07.
No.
Abi?
No, sir.
What about year ended December 08?
No.
No, sir.
Yeah, it's period two we have. Okay? But we have December 09.
Yes, sir.
Yes.
630,000.
630,000. Okay. It means we have to fill these two by your working. Okay? You go to working. So our first working is 2009. Year of assessment, like old date. And what is this period talking about? Talking about a period that will start from 1st of October 06. Oh, 2009. Okay. The period that will start from 1st of October 07 to 30th September 08. That is the period we are looking at. So from the profit we have here, we are going to pick a profit that will communicate these two periods. Either that will involve up to October 07 and September 08. So let's look at those profits very well. Is there any profit that is showing 08 there?
Yes.
That period ended.
period ended and it's 8:40. But that
Yes,
period
sir.
ended when?
That's December 31st, 2008.
Okay, December. And it's 08, Abi?
Yes,
Meaning,
sir.
if that profit is ending 3 months after this our own, Abi? But
Yes, sir.
that profit is ending in December, 08. But we are stopping in when? So for them to have put period 2, it means that profit relates to profit that they earn immediately after this date. And immediately after this date is what? October 20 what? 07. Down to that period 2, which is 31st what? 12. Oh what? 08. Is that what that is the profit in question you have there?
Yes, sir.
Yes, that is the period they are saying. A profit that they earn immediately after the first accounting year down to December 2008. So if you can see they put 15 months there. So count this period, is it up to 15 months?
Yes, sir. 15 months.
Period from year to year. So that is the definition of this profit. So meaning what we are looking for is October 07, Abi. Down to when? September. Is it inside this place? It's there. It means
Yes.
our profit will now be 12 months all over what? 15 times what? 840. So what is our own?
672,000.
672,000. That is our own profit and we need 600 and please, who's not clear with this? So let's go to this year, which is 2010 year of assessment. It's 1st of October 08. Start period September 08. So which profit? I will explain this. We still need a profit that starts immediately October 08, Abi, but must
Yes, sir.
not extend beyond September 09. Meaning, if you check this profit that I have, it's up to December. Meaning, inside this profit, I still have 3 months. December, Abi, which is inside this period. So I'll first of all get down, which is 1st of October 08 to 31st December 08, 3 months. 3 over 15, Abi, times 840. What do we have?
$168,000.
168,000. That's 3 months. Then immediately we are still going to September, Abi. Immediately our journey will start from January 1st, 09, Abi. So when? 30th September. So which profit is talking about 09 there?
Yeah, and that's December 31st.
Okay, here and there.
9.
Here and there is 12 months now, is that not? And we will need to know how many months here? 9.
9 months.
By what? 12 times 630, Abi.
$472,500.
472,000.
500.
How much? 640, 500. So that is 640. 500. I mean, yes. That's for the second year. Hope you can see. Let's look at the new date. For 2009, year of assessment, new date. Okay, total of
2008.
2 million.
Uh-huh.
152,500.
152,500.
500.
Okay. Oh, wait, someone is saying, wait. Okay, thank you. So we need the profit for the new date, which is 208 and 209. And let's define this profit. This profit is saying January 1st, 07 to 31st December 07. That is the profit that will give me what I want. Abi? Yes. Is there any profit that is talking about 207? Year ended, Abi? Year ended
Year ended
07. That year ended 07 ended when? September.
September.
So my profit will start from January. But the profit they gave me there is ending when? September. Meaning what I need from that profit is profit that will start from January 07 to 31st. Abi? September. Oh what? 07. How many months is this? 9 months. Which is 9 over 12. But that profit is year ended. And how much is it? 840. So what do we have?
630,000.
630,000. Then I now need the profit that will continue again from 1st of October 07 to where you are ending December, 31st December 07. So which profit is next to that profit that can explain that?
period.
Period ended.
Period ended, period 2. And that period 2, we've explained that profit if you can see. October. Is it not part of my period? Okay. So meaning out of that 15 months, how many months are we looking for? We are only looking for 3 months.
3 months.
3
Please,
over,
I just got very well.
3 over 15, because the period is 15 months.
Thank you, sir.
Then times 840 as well, Abi.
168,000.
168,000. The addition of this two.
798,000.
798,000. Like the one giving us figure now. 798,000. Then for last year, which is 2009, year of assessment, and the period is 1st of January 08 to 34th December 08. Is there any profit that is giving me this? A profit that is ending in December, which is 08, is there, Abi? And how many
Period
months?
ended.
Period ended 15 months. Meaning this profit must have commenced from October last year, which is 07. But what me I need is just from January. Meaning I don't need December last year, I don't need November last year, and I don't need what? October last year. What I only need from this 15 months is 12 months, which is January to December this year. So it means life and direct, I will get 12 over what? 15 times what? 840. Abi? 600 and that is my profit. 372. That is the home and dry. Total is 2. Let's see the outcome. 2,100,000. So once you are done, please somebody help us to stamp all of this. Once you are done, you now decide that the taxpayer should be assessed to tax using the old word rule, because that will maximize higher tax loss, liability. And she can now go to cessation. Any question? Eh? Yes, your comment is your decision now. The taxpayer should be assessed to tax for the 3 relevant years. The taxpayer should be assessed to tax for the 3 relevant years using the old date. Because this will maximize accessible profits. These are the data that will maximize your accessible profit. And you know what that means? Once the accessible profit is high, the outcome of the liability is high. So that is for old dates. So this question contains cessation. So once we are done with cessation, sorry, with change of accounting, please somebody should snap this. Action. Action. You are the
President. Yeah,
so the question also contains cessation. So for the cessation part, when a company sees business, so there is old rule and there is new rule. But we are not going to present the two. It is the date of cessation that will tell you whether you are using old rule or new rule. So we've all agreed that we are using old rule because cessation occurred in 2013. And when the company sees operation, I've told you, there are some things that can still come in or go out. So that is to enable you to adjust the profit on cessation to become a terminal profit. So under cessation, so you do another table, done a table for change of accounting date, then you now do table for cessation. So under your cessation, the break for when did you cease operation? We cease operation.
Calculate just the
Okay. We ceased operation in 2013. But because we are using old rule, how many years will be relevant? 2.
Hello, please help us to send to the group. Oh.
Yes, somebody will do
Help us
that.
to send it to the group.
Which is the year before cessation, Abi? And year of cessation. Let's see, which is 2012. Somebody should help us to send it. 2012.
Sir, can you be audible?
Aha. Don't know that it's power. Year of assessment. So I'm not audible enough like you. Okay. So no problem. So these are the 2 years. I hope you capture this side too.
Yeah,
These are the 2 years we are going to. And you shall it will go later. So these are the 2 years. So the first thing you do, because they have given us some things, some transaction after cessation. So you go to your profit, pick your profit on cessation, you adjust it. And that adjustment is what will give rise to terminal profit. And you come and say profit on cessation. How much is that profit? The profit we have on cessation date.
90,000.
So what are the inflow that came in? The inflow you recognize must be inflow that is ordinarily going to be taxable. You know, we've not very soon we'll move to concept of taxable income and disallowable expense. Any inflow I'm adding here must be those inflow that ordinarily they are taxable. Any expenditure you deduct here must be those expenditure that ordinarily they are liable. So if there's anyone that you think they are not liable, you are not going to consider them. So there is a bad debt that came in Abi in 2013. So if a bad debt that was previously written off, so bad debt to tax is normal. When customer can, when you say the debt is bad, you can't recover. Either the person that is owing has died, either the person has already filed liquidation, it's already bankrupt. Everybody is aware that he can't pay. There's nothing tax authority will do. Whatever that person is owing you, what happens? It becomes bad, and it is a liable what? Expense. So no issue. So because they have allowed that bad debt in the previous year to be an expense, now the person has resurrected now, like Jesus Christ now. So he's alive, and that person can now pay you. Maybe person like pitying you because you have sales business. Now say, maybe it is because of me that the money that I'm owing this man. Oh, that is why this person cannot continue the business again. Don't mention my name in the court of law. Please take your money. So now it is what? An income. And it's an income that will be taxed. So in that case, you add it as bad debt recover. 120. If there's any expense that they are incurring that is allowable, you deduct. I think the only one we have there is that of debt. If for me to get 120, I need to involve police. And police will give you percentage safe. Eh? The fuel. So,
Hello.
Yes.
Hello. Please, if the bad debt wasn't recovered, it won't come here, right?
If the bad debt is not recovered,
yes,
there is no longer an income. It is you have treated it as bad before, but because something that we call to be an expense is now we are not getting it back, so that's why it's an income. So if they didn't recover it, it will be like expenses forever.
Okay, thank you.
And I've told you, why is it an income that we are bringing in? Because as at the time it was bad, tax authority allowed that as an expense. Assuming tax authority did not allow it before as an expense, then they won't come and tax it now when it is income. Yeah, you must have paid the tax then. So you can't come and pay tax on it again. Confirm. So, expense, on debt recovery, is that much? We deduct this one because an expense. What do we have? 190,000. So you can see now So where we are supposed to be using a profit of 90 before, so we'll be making use of how much? 190 now. So that's the first thing you do when there's any inflow or outflow after cessation. So you cannot draw the table. So year of assessment, basis, period, and assessable. So we said we cease operation which month?
Excuse me. Please, could you please explain the provision of III? Just explanation on that, please.
Come again?
Could you please explain the provision of 3 under additional information?
Provision of IIR.
This, yeah,
Which one is IIR?
under additional information, after the bad debt recovery. That's number 3. That's an expenditure incurred in assessment year 20.
Okay. They say they incur an expense in a particular year, but they didn't pay it until after, I think until after cessation. But did they even give you the figure? There's no figure. The thing is, you must have incurred some expense and you are not paying. Depend on what the tax authority look like. Because your account think concept must have captured that. Because you have incurred in that year. It has been incurred. But because it's not paid, I don't think that information is relevant. So except if they have told you then that tax authority disallow that expense then because they believe that it has not been paid. In that case, it means they are going to recognize it now when you pay it. But if you incur expense and the expense is like salary, and I didn't pay, I've recognized salary in profit and loss, but just that I did not pay. So there's no issue. The only issue that will come in is the area of deferred tax. And that is the only issue that will come in. And there will be deferred tax. If tax authority is not saying no, that they are not taking that expense because you have not paid, that the only time they will recognize that expense is when you have actually what? Pay it. It means they didn't allow the expense in the first place. But now that we have paid the money, then we can allow it. In that case, we bring it in. But the straightforward to that information is that there is no even figure. Assuming we have figure now, we start cracking our head whether was it allowed before or disallowed before. If it was allowed before, so there's no point of you bringing it in again. But if it was disallowed because they didn't pay it then, but now that they have paid, then you cannot deduct it.
Thank you.
Sir, please, can they share the picture for us to have a review of what we've written on the platform, please?
Is the network according to the media? So, sorry, we have a technical issue.
Please be on top of the matter.
Okay, sir. Complete. So, sir, I was going to say, also the question, they've not mentioned if the company is operating in cash basis or umbrella account, or umbrella business. Because if they are enjoying this expense, then
majorly companies will definitely update Accura because you are going to prepare this report. So the issue of cash basis is only limited to tax area. Even but it depends on the tax law on that jurisdiction. But despite that, I don't think tax authority normally pay attention to your report and see if you have actually paid, except those one called provision. You know, there are some expenses you report that are basically based on provision, that you are trying to apply prudency what? Measure. But if it is a report that, okay, I've incurred rent, it's just that I've not paid, I don't think tax authority normally pay attention to it. So they will still allow rent, because ordinarily you cannot operate a business without paying incurring rent. So rent will still be treated as a liable expense. So, but no doubt that you as an accountant, you are adopting Accura concept. So that really will not be a problem of tax authority too much. But to some extent, it will cost. And that is where the issue of deferred tax will now come in. So meaning they can disallow it as at that time. But that does not mean they will not allow it again. They will not allow it later. But in order to bridge the gap on something that you have recognized and something that tax authority is there to recognize, so deferred tax will now cover that aspect. But the only thing you can do is that, okay, what is the position of that tax authority regarding that particular expense? Are they recognizing it on cash basis or accrual basis? So if the information is now clear that, okay, no, the position of tax authority is for them to recognize on cash basis, it means they must have disallowed it when it was incurred. Now that it has been paid, they will allow it, so you can bring it in now. So on the basis period, now, remember we have 2 dates now. They have been maintaining September, but they have changed to December, and we want to compute cessation. We said under cessation, 2 years are relevant, abi? A year before cessation, abi? Which is 20 what? 12. And a year of what? Cessation, which is our ultimate year. So let's see. What I will now see small students now. We said we should do actual year basis, abi? And also for PYD. Is that not?
Sir, please, can you adjust your camera a bit, please?
So a year
No,
before
to the left, sir. To the left.
to the left, bye. Is it like this?
No, no, sir. That date side, that 2012.
No, to the other side.
Yes.
Like this?
Yes,
Cannot
sir.
see my hand.
Yes, yes.
But this thing is, if they do too much.
Yes, it's okay this way.
It's okay. Thank you, sir.
Okay. So for 2012, so this is old rule, and I've explained why we're using old rule, because this is before 2019. So under the old rule, 2 years are relevant, a year before cessation, which is your penultimate and ultimate year. Under the penultimate year, you do 2 assessments. One should be based on actual year, and one should be based on what? PYB. Sorry, PYB. But all of this, you must make use of your accounting mode. But now the problem is that we have 2 accounts modes. I mean, there was a time we're using September, and there was a time we're using December. Which one are we going to use to determine this? We are over to you. Which month are we using?
We're using December, sir.
We're using December. Why?
We are looking at actual year.
Okay, for the actual year, okay. Let me first of all do that, which is 1st of January, abi? 2001 or 12. So 31st December 20 what? 12, abi? Was that trap? Oh yeah, PYB, but which one? Which
11, preceding year.
which month?
January
December.
2011
You
to
go?
December
January 2011.
January
December
2011.
2011.
Yes, sir.
For that,
But why? Which month of account are we using? Are we still using December or September? Remember, we have
December.
dates here.
We are still using December, sir.
We are still using December. Why?
Because that's
Because
the date.
the change
Because
happened
the
in
previous year,
2020.
There's something I'm expecting that you have not good. I can't get you very well. Why do you see that?
Ultimate
The
year.
change had already happened maybe 3 years before.
You have not given me this. Because we use December here. Why? Based on assumption that is actual. That will be fiscal year. And you are still saying my accounting mode should still be December. Because I know we have September. But why not September that you are saying I should use December?
because the 2011, which is the previous year, to 2012, still has the actual basic period for December.
No, that is not the explanation I'm expecting.
they changed
They changed December.
so we have to count 20.
Sir, because
Why is it that I
sir,
cannot? Why is it that I
it's
cannot?
because
Yes.
they cease operation on 31st December. So we are
Because
using the ultimate year of cessation.
the reason is because after this year, they have already changed. That is just that. After 2012, the company has already changed their what? Their date. Because they changed their date in 2008. Meaning you expect them to start using new date from that moment henceforth. So that is the reason, because at this date that we are talking about, the company is no longer using September. So in that case, you can agree that I should use December. Still on PYB, that would not be 20 what? 11. Then January 1st, 20 what? 11. So then in the ultimate year, it has to be the first day of that year of cessation to the month of what? Cessation. And the cease operation in 2013, Abi? Yes. And first day of 2013 will be what? January what? 20 what? 13. Which month did I see? December. Do not look as if it's coincidental. You are not in class. It's not coincident. So that is that. Is there any profit that defines that you can see December 2013? Yes. How much? 190. 190, Abi? But it has changed. You know, it used to be 90, but it has changed through terminal profit to be how much? 190,000. Okay. Let's check. Is there any profit that is explaining December 2011 year ended? Yes. How much? 480. 480. Remember, we are picking higher of these two. Hold on first, so it's 480, Abi. Yes. Is there anyone that is explaining year ended 2012? Yes. How much? Which one is higher now? 480. 480. So if you like, you can create additional column. You put the two figure first, then now put higher. And the higher is what you are picking here. So
yeah, for the year 2013, is it not 90? Because on the question, it's 90, not 190.
yeah, I just said it to terminal profit now. Where were you?
Okay, I get now.
I just said it to terminal profit. Offering, okay. Counting money, such. He's practicing accounting too well. So that is the end of the question. And that is what you need to do. So they can give you commencement, change of accounting date, and what? Cessation question together. That should not be a barrier. So stop there. So you want to get mark like it. So this now, this is a question that is based on the relevant word. Yes. So if the question is now saying that compute accessible profit for all the what? All the years, then you now collate everything together. But remember when you have decided, in 2012, you have decided I'm using this. Abi? For under change of accounting, you have decided, Abi? Copy and paste for those areas. Then the remaining one, then you can now determine the accessible profit. But that is the requirement of this question. Any question? Please help us to know. So let's look at the first question now.
Hello, sir.
Yeah.
Hello, sir. I have a question, sir.
Okay.
Yes, sir. Please, based on cessation of business, if it were to be new rule, how are we going to treat it? Are we still going to be using actual year basis and prior year basis?
To be new rule. So
Yes, sir.
2012 will not be relevant again.
Okay.
You continue to place the company to task until the last year that the business will what? See.
Okay.
So meaning we determine the higher of these 2 years in 2012 will no longer what? Come to play.
Be relevant. Okay. Thank you, sir.
Okay.
Please help us to snap, please.
Yeah. So let's look at question 3. So question 3 will take us to our next topic, which is loss relief. But when we solve this question, then I will now introduce you to what we call loss relief. Remember, I gave you a template last week on how you determine your CIT, right? From the first point is we getting our accessible profit, either from commencement aspect or change of accounting aspect or cessation what aspect. That is the first step of your CIT. Get your accessible profit. Then the second aspect of it is, do you have any loss in the previous year? I cannot just go and pay tax on my profit for this year if I have previous what losses that the business has what suffered. The first thing I need to do before paying tax is to what? Is to relieve those losses from my what? Profits. And the last aspect before you can pay your CIT, are you claiming any capital allowance on those assets that you have used to generate those income? Then if yes, then they will also need to get a relief on capital allowance on your what? Profit. So these are the two relief you normally get on your accessible profit. So for loss relief, so loss is not the time you'll be making profit. Not the time you'll be making profit. It's not what that you need to be making profit all the time. So when loss occur, the same thing that tax authority would do to profit is what they will do. They will look at your report. They will check the report if it complies with tax law. They will look at all the income that you have recognized. Are we sure you did not omit any taxable income? They will look at your expense that you have recognized. Are you sure that all these expenses are taxable, are liable as far as CITA is concerned? Once they are okay that this account is in line with CITA, then, and it is a loss, no problem. They will accept that loss like that. But they are not going to give you cash in return because you have suffered loss. If not, everybody will be declaring losses new. It means they are encouraging you to be making loss. So the only thing they will do to help you is that, okay, work harder next year so that whatever profit you declare next year, then before you think of us, then first of all, offset your what? Your loss. So it has been that like that, meaning in a year of loss, you are not paying tax. But remember, when they now introduce the minimum tax, so that okay, we are saying we are not going to take anything from you. It's like we are not doing well for you. We are not encouraging you. So despite the fact that you have declared loss, there's a tendency that you are still going to pay tax. And that is where the minimum tax will now come in now. So I may not pay tax through CIT because they are basis of income tax computation. We have the normal computation. The normal computation is the 30% on your taxable profit. I may not pay 30% because I don't have profit. But because I have earned revenue for that year, I will pay tax. That is minimum tax computation. So if your boss is saying, okay, no need for tax this year because we did not do well, let them know that, okay, we have earned what? Revenue. Except if your company is a small company, then you be exempted from minimum tax. So that loss relief is not functional. It's functional, but that's not the normal tax you are supposed to pay. It's going to function because the year you declare profit, you pay original tax. Minimum tax. That's why I say minimum tax is just like at all. You have to do something. But that's not what you are supposed to pay. But the year you now make that profit gone, where the go get tax will come, you will now use your loss to reduce it. Not that when you now make the original profit, no, they will not tax it on that same profit. They will reduce the loss that you have made. Yeah, before they will tax it on that profit, I will first of all reduce it, the loss, to the balance. Make example, 2013, 2014. Yes, assuming you make a loss. Okay, we have a question we will use here because the question is both loss and this. When we get there, we'll see. So that is loss. So basically, after this question, I will give you a loss relief material. They will look at it. There's nothing serious we are talking about. Under loss relief, It's just for you to know the types of loss relief that we have. We have the current year loss relief and the carry forward loss relief. Who are the taxpayers that are supposed to use it? Entity, corporate entity cannot use current year. Corporate entity can only use what? Carry forward. Yes.
Is this things are
And once I use carry forward, it means it's preceding, meaning my loss for this year can defer to next year, no problem. And because I can defer to next year, I don't need to inform tax authority. So you understand? But if I'm applying current year relief, meaning I can claim my loss relief this year, and it's as a result of because you may have one line or two or more businesses that you are doing, that one activity is bringing loss, but you have another activity that is bringing what? Profit. So in that case, because it is current year, I can offset the loss from activity A from profit from what? Activity B. But the taxpayer that can make use of current year are the individual what? Taxpayer. And corporate entity cannot use what? Current year. But individual can use both current and what? Carry forward. When I apply current year relief, it means if I suffer loss this year, I can claim the loss this year, provided there's any area you can make profit for. But if there's no area I can make profit for, meaning I'm not getting anything as relief this year, then what happens? The next option for me is to move it to next year. If there's no profit for me next year, I'll take it to third year. Is that not? If no profit third year, I take it to what? So the maximum period you can carry your current year relief is 4 years. That is corporate individual. But for those that want to adopt carry forward relief, they can carry it in Jesus' word. Yes.
Is that current year, like
4 years. Yes. Maximum for current year. Once you choose current year, it means you can only carry it forward for how many years? 4 years. But if you adopt carry forward, so you keep on carrying it until cessation date. That is when the loss will automatically what? Payment. So I will send the material, but let's solve this question. So for this question, as you can see, what's the name of this entity? Identify and explain types of what? Loss relief and their what? And their treatment. I've sent you the material, but to identify them, you already know that there is what we call current year what? Loss relief and what? Carry forward. Loss relief. So what they are expecting you to tell them here under A is to tell me the type and give me the features. Give me features for current year loss relief and give me feature for what? Carry forward loss relief. That's what they are expecting you to say 6 months without doing nothing. Just 6 months. Then for the B part, what is this? Olokilele. Ologbojo Nigeria PLC has been in the business of importing glue for some time. Due to recent economic meltdown and recession in the country, the company has been making losses for many years, but made a good recovery in 2016. As you can see, the profit we have there. So you can see they have been in business and they maintain the accounting year to be when? December. Is that not? Yes. December. All the accounting year. It means this is not a new company. And they didn't change their what? Account. And they didn't cease. This is just like a normal company that is a going what? Concern. So despite the fact that they are making losses, you can see they are trying to what? To recover. So what we apply to this company is PYP. And the question is not saying you should compute what? Tax what? Liability. Then apart from this, you can see their capital what? Allowance for the what? For assessment year in 2012, 2013, 2014. Now, the profit or loss given to us is in accounting year, But the capital allowance given to you is in year of what? Assessment. And what is the first year of assessment to that capital allowance? 2012, Abi?
Yes.
As a taxman, do you work with a tax year or accounting year?
Tax year.
As a taxman.
As a taxman, assessment year.
Assessment year you work with. So meaning the profit, the first loss declared by the entity is year ended when? 11. What will be the year of assessment?
2012.
2012. And that is why you have the capital allowance to be claimed in 2012. So to approach this question, you don't need anything. The question is asking you to compute as what? Liability straight away. And what's the name of the entity? Ologbojo. Is it PLC?
Yeah, Nigerian PLC.
So you come here and say computation of income tax liability for our first year is 2012. And what's the last profit declared there? 20 what? 16, Abi? The last profit declared 2016. Then which year would that be assessed to tax? 2017. You are ending your own 2017. Please pay attention. 2 naira sign. So we don't need table. Go straight. The assessable profit has already been there, but then we don't have assessable profit for the first. How many years? For the first 3 or 4 years. 4 years. Loss, right? So in that case, so in 2012, year of assessment, so do we have assessable profit? No. We don't have. Put that here. Loss on absorbed loss. Really brought forward. We don't have that. But in 2012, we declared loss, Abi?
Yeah.
That will be unabsorbed loss relief for the. Anytime you see me using this time is for the year. Online, don't ask why again. What is the actual loss declared for that year? 350,000. Like this, Abi? So meaning the total loss that we are going to get the relief on is this plus what? This, which is how much? 650,000. So because there's no profit this year, meaning we can't claim anything, we will continue to carry this. And you know, it's an enterprise. And an enterprise adopt what we call carry forward. But if it's an individual and they have decided to use current year, you will be counting that any year, the maximum they can carry this 50 is what? 4. After that 4 year, you retire that loss.
So why do you ignore the first loss?
Where is the first loss?
950,000.
Mbuluwa. He didn't give me now. Why did you not? 2011. 2011. Which year would that be assessed to tax?
That's 2012.
2012. Now, so the answer is supposed to be 950.
That's 915.
915. That is the accounting year. But the tax year is 2012. So we work with tax year. Except if they have already told you that that is their year of what? Assessment. So this will now become unabsorbed loss. Relief carry what? Carry forward. So means you are not paying tax. Taxable profit. Nothing to tax, no profit to tax. So your CIT at 30%. Are you paying tax? No. Educational tax. What year is this? 2012. It's also what? Dash. The only time you pay educational tax is when you have what? Sensible profit. But it's possible I will pay educational tax. I will not pay what? CIT. I will pay educational tax because I have accessible profit. But I will not pay CIT because my relief has absorbed my what? Accessible profit. I may not have profit to pay CIT. But because you have declared accessible profit, then that will make you to pay what? Educational tax. And I was thinking a serious. I said you may pay, there can be a year you pay educational tax, but you still not pay what? CIT. Why? Because you declare accessible profit. Compulsively, you have to pay what? Edu tax. But because I've declared accessible profit and I have loss, that loss can wipe away my what? Accessible profit. And I will not have anything to declare as what? Taxable. Because the only time you pay CIT is when there's what? Taxable profit. So let's go to another year. 2013 year of what? Assessment. Do you have accessible profit? No. No again, Abby. So we have absorb loss relief. Forward. The 950 in year one that we have not enjoyed, it becomes what? Roll forward here. Since we didn't make profit this year, we must declare another loss again, have we? Okay. Loss relief for the year. How much is that one? 6 what? 650. So if we add these three together, what do we have? 1.6. 1.6. Abi? Yeah, now. Are you absorbing anything? Loss, relief, absorb. You can only absorb when you have profit. Yes? Can you see?
Thank you.
You can only absorb your loss when you have profit. So if there's no profit, where are you going to absorb your loss from? Nothing to absorb. Means nothing here. So and at the end of the day, 1.6 will be carried forward again. That's your unabsorbed loss relief what carry forward. So your taxable profit will still be what? New. Abi? But nothing to show. Your CIT at 30% will still be new. Your edu tax at 2% still be what? Still be new. Please. Snap. So that's how we do it. You get to that year that you make profit. Yes. How many years we are looking at? We are looking at 4 years of loss. Yes. I should be able to finish. Yes.
Is it okay to break this computation?
Hey, there's something. We have omitted capital allowance.
Is it okay to break this computation?
Wait. Sorry? I'm sending to them. Okay. Sorry. In a tabular form. Sorry.
Based on the
tabular form, as in your CIT. Let me understand what you're trying to say. How? Let me see, 2020, 2012,
Yeah,
2013, 2014,
yeah.
and I have accessible profit.
Yeah.
And but just as in maybe that is in practice.
Yeah.
But I'm looking at it that if I have my accessible profit now for any year, it will show.
Yeah.
And if it is loss for any year, it will show or dash. The capital it can work, but don't adopt that in the exam, please. Sorry, something is missing. We didn't consider the capital allowance, please. So unabsorbed loss release. Loss absorbed. We didn't absorb anything. So what we carry forward is 90. So this becomes, sorry, let's up here. This is total loss. Okay. This will now become unabsorbed loss. Will they carry forward? So, because the question gave us capital allowance, meaning the only thing we are claiming on your accessible profit is not only loss. We also have capital allowance aspect that we need to what? We need to claim. So even if you are not making profit, the same way you have been piling your loss too, is the same way you'll be piling your capital allowance. Until when you have profit that will take care of all of them. So you come here too and say, utilize what? Capital allowance brought forward. How much is the capital allowance brought forward? Nothing. But we have capital allowance for the year. How much? 65,000. So the total you want to claim is how much? 65,000. So capital allowance. Is there anyone you are utilizing now? You don't have profit, man. You can't utilize. Before you talk about utilization, is when you have profit. In that case, everything will still go to next year, provided you do well. So that is your utilized capital allowance to carry forward. So at the end of the day, you are supposed to minus your loss from profit. If anything is left, you minus what? Capital allowance. Then you now have what we call taxable profit. And you can talk about what CIT at 30%. Then edu tax at. I hope you know why I'm using 2%. It's old, not old rule, as at that time, educational tax was still 2%. It became 2.5% in 2022. Take no, you must know this thing, by the time you start fully. Not that you just go to question. Educational tax has changed. There will be a question you solve, you use 2%. There will be a question you will solve, you use 2.5%. And there will be a question you will solve, you use what? 3%. So it became 2%, sorry, 2.5% from 2022 until September 1st, 2023. It became 3%. What? How do we get that? Okay, well, let me see. Some of them may not be, but as we are solving. So But let's see. When we check the material, we'll see. And no, I think the finance start 2020 this year. Did not change. Did they change anything on the educational task? No. Yeah, you can snap this now. Let's move to another year. So that is why your brain must start to know at what point do we need to use this rate. So let's go to 2013 now. 2013 year of assessment. Do we declare assessable profit? No, it means it will still be that. Then for my loss relief now, I have a 950 coming from previous years, Abby. And that would be my draw forward.
Please, I don't see the camera. Let's see what you're doing.
Are they talking to us?
Can we see you? We are not seeing what you're doing up there.
Where?
Up there, yeah.
So what is the loss for the year? 650. Yeah, I think I've done that before. So how much is our total loss? Leave now. 1.6. So do we have anything to absorb? We don't have anything to absorb for now because we don't still have profit to take care of that. So meaning your loss absorbed for the year will still be dash, Abi. So that will be this. At the end of the day, I'm going to have 1.6 that will carry forward again. So on absorb what? Loss. It will carry. When you go to capital allowance, this is the second year. We have pending 65 that you have not utilized. It becomes what? Brought forward. For this year. Then check 2013. Do we have capital allowance we are claiming for that year? 102,500. So in that case, what do we have as total? 167,500. We cannot still claim. We cannot still claim everything because you are not making profit for now. It means what you are utilizing is how much? Dash. Is that not? You can only utilize based on the profit you have. But once you don't have profit, continue to take them until cessation date. So what will be my carry forward? 167,500. So that will be my capital allowance carry forward. Meaning I'm not still going to pay CIT and I'm not still going to pay what? Educational tax. That's how it continue. So you look at that, am I doing the right thing? But that is the right thing. So you are having your CIT liability is dash. It's dash because you are not making profit. Don't pay tax. So yeah, we are done. Snap. Let's go to the third year. Did they make profit in third year? Okay. In that case, your assessable profit will still be dashed. That is 2014. Your assessable profit will still be dashed. How much will be our unabsorbed loss relief brought forward? 1.6. 1.6. Is there any loss for that year? How much? To increase in 1,260,000. So total loss will not be how much? 2,860,000. So by this time, tax authority will be telling you that. Are you sure you people are not lying to us? At times they carry loss for 3 years. Now why is still there in the business? So they will say, oh, you're supposed to go and rest. But they normally tell people like that. Just see the operations. And she just sees now. How do you people pay salary? But is it really in reality? It's possible now. You are just waiting for maybe, imagine for those who that were like waiting for Buhari to go, maybe the economy will change. They can at least be maintaining that with the hope that something will change and yes, because you'll be expecting claim. That will definitely trigger back duty assessment again. So for capital allowance, my brought forward will now be 167, Abi. Is there anyone for the year? How much? 80. What will be the total? $252,500. So, and the 252,500 will be carried forward again because you cannot get a relief from that year. Before you can even relieve your capital allowance, you must first of all relieve your what? Your loss. But priority is always given to it. And that is why you can see it to be at the this order. Yes, that is the order of preference. It's when you settle your loss. So if they still to claim capital allowance, it means I will continue to carry this one forward. Once you claim your loss relief and there's no profit to claim capital allowance, it means you're not going to claim your capital allowance until when you have sufficient profit to do that. So that is for the third year. Oh yeah, Baba. Thank you. So for the 2015, so we have our loss brought forward to be how much now? 2,860,000. Do we still declare loss? How much? 125. That's reduced, Abi. When something good is about to happen. $985,000. So you cannot still claim anything because you have not declared profit. You are still taking the whole of this again to that next year. 2,985,000. So for your capital allowance, your brought forward is 252,500. Do we have for the year? How much? 120. So how much is the total now? How much? 372,500. And that will not be 372,500 that you are taking another debt. So meaning for 4 years now, you didn't pay anything as tax. But we would have computed minimum tax if they have declared their revenue to us. Please take note. You can see my CIT is dash. But assuming they have declared their revenue to us that okay, this is the revenue they make in that year, then we would have applied what we call minimum tax. But because they didn't tell you their revenue, and that is why we will not be computing minimum tax. They are not paying anything as tax. But I told you before that there's what we call at all, which is the minimum tax. And that minimum tax can only be computed if you have access to their revenue. So when in a question, they have already disclosed their revenue to you, it means you apply what we call minimum tax. We'll get there, hold on. So I will not make things difficult. So, Baba, yeah, snap. Let me do one more before we start. So once I do one more, then you do the last year. So 2016, we made profit. How much? 185. 136. Assessable profit, Abi? 136,000. Is that not? Yeah. Okay. Yes, 136. Meaning in this year we made a profit of 136. Is that not? And they tried, so they are trying to come up. So, but there's a loss brought forward from previous years of how much? 295,000. 290. 295,000. So there won't be any loss for the year again. You can't make profit and make loss for the year. Is that not? Yeah, so there won't be this. So meaning the total that you are going to get a relief on is how much? 290, 2.985. Okay. So because we have declared profit this year, then we have something a little bit to get from our loss. So loss absorbed for the year will not be how much? 130. Once your profit is enough to cover this loss, take everything. And once you do that,
Excuse me.
yes.
There was something you said about when you carry loss for 4 years, that loss will be eliminated.
And that is for current year. And it's only individual taxpayer that can apply it. This is a corporate entity. So corporate entity apply carry forward. What's the figure?
Okay.
So that's what I can carry forward. My capital allowance brought forward is how much? 372, 500. Are you claiming anything for that year? No, Abi. It means so that 2849 is still lost. It's still lost now, yes. You carry it to another year when you make profit. Your capital allowance coming to this year is 372. Do we have for this year? No. Can you utilize anything from this capital allowance? Do you have profit left? No profit. Out of 136, 136 has gone to relieve what? Loss. Do you have anything to offset your capital allowance? No. It means this. So it means at the end of the day, 372 will still be what? Carry forward. So 136 minus 36 will give you what? 0. Meaning your taxable profit will still be what? And your CIT will not be how much? 0. But are you going to pay educational tax now? Yes, because you have declared 136 as your what? Profit. You now have 136,000. So what would that be? 2,720. At the end of that year, 2,720 will be your income tax.
Please, can you move the camera down, sir?
So you can see I've started paying tax small. So probably by next year, you have enough profit. Maybe you can pay CIT. So, but for this year, you're only paying educational tax because you have declared accessible profit. So you can do the last year. Here. Okay, the medium one. So you can do the last year to continue from there. So somebody is snapping that. So we'll continue from this from here next week. So Next week. You've done that, Abby?
Yes.